Sit back and relax. You're listening to the Wealth Tech Today podcast. And I'm your host, Craig Iskowitz, CEO of Ezra Group Consulting. This podcast features interviews, news, and analysis on the trends and best practices all around wealth management technology. And this is our August news roundup. We have some great stories for you. We're covering alternative investments, RIA platforms, CRM, a little financial planning thrown in, the advisor tech map, of course, and AI. And speaking of AI, what is your firm's AI strategy? Do you even have one? If not, you're flying blind into a storm of changes coming for our industry. At Ezra Group, we help wealth management firms turn their AI chaos into competitive advantage. Our tech stack and AI strategy solutions are built specifically for advisory businesses, integrating your custodial feeds, portfolio management systems, CRM, and AI tools into a large, single, scalable source of truth. If you want to free your firm for exponential growth, you need to run, not walk to our website, ezragroup.com, and click the golden Contact Us button on the homepage. Whether you're evaluating your first AI-powered solution or struggling with a bloated tech stack that's become a liability, the experienced team at Ezra Group will help you design, optimize, and future-proof your infrastructure. We know what works and what doesn't. Okay, a couple quick housekeeping chores. Please subscribe to this podcast wherever you listen to podcasts. Check out our sponsor, the Invest in Others Charitable Foundation at investinothers.org. And if you are a software vendor in our space, register your product at our vendor portal at ezragroup.com/register so that your wealth tech integration score is always up to date. All right, now kicking this thing off, Arch teams with Mastro to give ultra high net worth investors enhanced alts data. As we all know, alternative investments have become one of the fastest growing parts of the wealth management landscape. According to BNY Wealth's 2025 Global Family Office Study, 2/3 of family offices with more than $1 billion in assets say they plan to increase allocations to private equity over the next year. Even smaller offices are holding steady, with more than half continuing to commit to alternative investments. Orion's 2025 Advisor Wealth Tech Survey highlighted a growing focus on alternatives, with almost 1/3 of advisors prioritizing these investments and another third planning to do so within 3 years. There's a lot of pressure on advisors to increase returns and also increase diversification. And as the number of publicly traded companies continues to shrink from approximately 9,000 in the mid-90s to 5,400 today, more value creation is shifting to the private markets. So in this environment, access to non-traditional assets offers a pathway to diversification and long-term portfolio growth beyond the constraints of traditional 60/40 portfolios. Okay, so this is a gap that a couple firms are looking to address. So Arch is a company that describes itself as a portal of portals. They were founded to give investors a digital gateway into private markets. Their platform automates routine but essential work collecting K1s, managing capital calls, and extracting data from multiple fund portals while standardizing reporting across private equity, venture capital, hedge funds, and real estate. Today, Arch supports more than 400 allocators worldwide, including over 150 single-family offices, 100 RIAs, and several global banks. Now, they are partnering with Mastro, which is a wealth management platform, and they take a broader view of things. Now, Mastro has first gained traction in Central and South America, where wealthy families needed technology that could handle multi-currency and multilingual portfolios spread across multiple international borders. Now, those early strengths helped them expand globally, and today Mastro is known for consolidating data from more than 600 custodians into their single platform. The platform covers both liquid and illiquid holdings with real-time wealth visualizations, customizable reporting, and built-in privacy and security controls. A number of Ezra Group's wealth clients based in Central and South America use Mastro as their wealth platforms and for data aggregation and reporting, so we're quite familiar with it. So we're very interested to hear their announcement that they're doing a strategic partnership with Arch. And this integration will route real-time alternative investment data into Mastro's platform, enabling their clients to have enhanced wealth visualizations across their liquid and illiquid assets and liabilities in a single dashboard. So, of course, Mastro is offering a comprehensive, up-to-date view of the total net worth and now including alternative investments across different geographies as asset classes, managers, and so on. According to the press release, clients can choose to integrate Arch's alternative data management and reporting capabilities directly into Mastro's platform, and this would eliminate some manual workflows such as K1 collection, capital call tracking, and Arch provides a better flow of data that will provide Mastro's clients access to deep, granular insights on their alternative holdings. We've seen a lot of wealth platforms jumping into the alternative offerings and partnering with a lot of other of the bigger alternative firms. Envestnet launched their own alternative exchange that was powered by iCapital and UBS. This is back in 2021. And just in June of this year, Envestnet expanded their access to alternatives with integrated models and advisor traded capabilities, partnering with BlackRock, Fidelity, Franklin Templeton, State Street Global, and their own PMC. Orion, not to be outdone, last year announced a partnership with Case to offer alternatives, and this year partnered with iCapital. So they're looking to catch up and also have a steady stream of alternative access for their clients. And some research interesting in the Case announcement, joint research by Case and Mercer, which surveyed more than 250 independent financial advisors, found 85% anticipate they'll dial up their alternative allocations. Related to that, 4/5 of the advisors surveyed agreed the alternatives can be helpful in achieving client goals and objectives. And even firms that are trying to catch up to Orion and Envestnet, like Advizon, are also partnering in this space. Advizon last year announced a partnership with Case for their alts investments. So we are really seeing the democratization of alts, at least across the wealth space, and for financial advisors to be able to offer their clients on almost every one of the major platforms now has some sort of alternative investment capabilities that are integrated. Because up until now, there's been a lot of task switching, especially with our clients. We're seeing that's a big problem, having to bounce back and forth to different alternative platforms, as well as your core portfolio management system, your custodian, if you do insurance, there's all these different portals and everything's in different places. So we love to hear about integrations and when capabilities are merging to make it easier for our clients, our RI clients, to get access to data and reporting. So for the two firms in this article, this story, were Arch, and they are arch.co, and mastro.com, and Mastro is spelled with 2 T's. All right, next up, GeoWealth announces it has raised $38 million in a Series C funding led by Apollo. GeoWealth, a proprietary tech and turnkey asset management platform, today announced that it has raised a $38 million Series C funding round led by Apollo. In tandem, GeoWealth and Apollo have formed a strategic partnership to expand access to customizable public-private model portfolios for RIAs. The previously announced convertible note investment from BlackRock, JP Morgan, and Kanye Anderson Capital Advisors is included in the Series C funding total. This strategic partnership between GeoWealth and Apollo will combine GeoWealth's unified managed account UMA technology, powered by its proprietary portfolio management software, with Apollo's private markets building blocks to help clients construct more efficient and robust multi-asset portfolios. With this capital infusion, GeoWealth plans to expand its public-private model capabilities, investing in product development and human capital to help advisors meet growing client demand for a broader range of asset types in a UMA. The funding will primarily accelerate innovation in GeoWealth's UMA capabilities, while also strengthening the core tech foundation for its next phase of growth. As part of the use of the proceeds in this round, GeoWealth has also completed the acquisition of the TAMP assets from Freedom Advisors. Now, there's been a lot of overlap between TAMPs, model marketplaces, and outsourced chief investment officers. So all these are running together, especially for advisors when they're looking to outsource their investment capabilities. Which one of these do they use? Everyone's launching a TAMP. Lots of the larger RIA aggregators now have their own TAMPs, oftentimes powered by either Envestnet or Orion under the covers. So there's tons of options for advisors these days. There's also a lot of confusion as to what a TAMP is versus a model marketplace versus an OCIO. So we spent a lot of time at Ezra Group defining some of these terms for our clients. But there was a great looking at some TAMP research from Tiburon, and I found a quote from my friend Scott McAlop, former CEO of TAMP First Ascent Asset Management, also a former strategic advisor for GeoWealth. His quote is: "The essential elements of the turnkey asset management program model were one, fully automated portfolio management, and two, ancillary services that freed the financial advisor from having to engage in back office operational activities." So that's a good definition of what a TAMP is. We also put in that in order to be a TAMP, you have to have fiduciary capabilities. You have to be able to push the button to make a trade, because there are other pseudo TAMPs or firms that are TAMP-like that offer lots of outsourced back office capabilities, but they can't actually trade. They can send trades, they can recon, they can do all kinds of things, but they can't actually make a trade. To me, it means they're not a TAMP. They're some other type of service provider. Uh, and not to go off on too much of a tangent, but Scott changed his title, which I love. He's now creative adventurer, entrepreneur, strategic thinker, mentor, writer. You go, Scott. Okay, so GeoWealth is competing in a crowded market, especially with the other monster TAMPs that also have UMA support, such as InvestNet, Orion, and AssetMark. There are smaller, more friendly TAMPs out there, such as AdviseOn and Advisor Engine. Both are end-to-end wealth management platforms that launched their own TAMPs as well. Advisor Engine built their own TAMP, and AdviseOn built their own TAMP from scratch. Advisor Engine is owned by Franklin Templeton, which has tremendous asset management capabilities. So their TAMP is built on Franklin Templeton. Also interesting, both of those firms, Advisor Engine and Advisor Engine, both have fully integrated, internally developed CRMs. So I have some notes here. AdviseOn launched their TAMP in March of 2022. Advisor Engine has a number of outsourced ETF models managed by Franklin Templeton Investment Solutions, which is a $47 billion asset manager with 75 investment professionals and 11 globally diversified open architecture ETF models. So you can check them out at advisorengine.com. And you can find out more about GeoWealth at geowealth.com. Next, we have a double story, two stories for Orion. First one, Orion reaches $5 trillion in assets. Orion achieves $5 trillion in assets under administration and $100 billion in wealth management platform assets. So they're breaking this out by their platform assets, which are the technology assets. And they've got 7.5 million accounts on the technology side and 326,000, what they're calling wealth management accounts, which I'm guessing are the TAMP assets that they're building up. Now, they're claiming clients, Orion clients, have an organic asset growth rate nearly 10% higher than non-Orion clients. Orion powers top performing firms, including 17 of the top 20 Barron's RIAs and nearly 1/3 of RIAs over $1 billion in AUM. And that is significant since InvestNet Tamarack always had the lead in RIAs over $1 billion. I think their number was around 1/3, 35 to 40% was the number they often cited. So Orion's clearly has caught up in terms of the higher net worth RIAs. According to the press release, the firm's growth is driven by advisor-driven initiatives, with technology accounts increasing by over 15% year over year for 3 consecutive years. As of June 30th, Orion supports more than 7.5 million tech accounts. I already said that. The firm now services $5.2 trillion in assets under administration, which could be reporting, recon, or just the advisory firms doing all the work, and managed $102 billion on their TAMP. All right, so that's pretty significant. We've all heard InvestCloud talking about them having 6 trillion and InvestNet having the same number. So Orion hitting 5 trillion is big for them. It really just further solidifies their position as one of the top wealth platforms in the space. You can hear more about them at orion.com. Now, the second story is also Orion. MassMutual and Orion launch all-in-one wealth tech platform to accelerate advisor growth. And this just came out 2 days ago. Life insurance and financial services company MassMutual and Orion announced the addition of a new wealth management solution. They're calling it WMS-Orion Platform. This collaboration brings an integrated, flexible tech and investment experience to MassMutual's network of more than 6,500 affiliated financial professionals. The platform brings together essential advisor functions to a single integrated solution, streamlining workflows, simplifying operations, and boosting productivity. Key benefits, they're calling it WMS-Orion. Platform include integrated advisor experience, expanded investment access, including UMAs. Also included is access to wealth advisory, minimum 1 million, a high net worth custom service experience that will soon include access to an options overlay. Interesting how different firms define high net worth. I think most firms wouldn't say 1 million is high net worth, but for MassMutual it is. Also scalable support, advisor empowerment, advisors have input and flexibility in portfolio construction, recruiting appeal, a tech and investment platform designed to appeal to next-gen advisors and teams. The WMS Orion platform is available to financial advisors affiliated with MML Investor Services, MassMutual's independent broker-dealer and investment advisor subsidiary. MML Investor Services currently administers $274 billion in client assets. That's at the end of year 2024. Wish they gave me some updated numbers. Orion seems to be the platform of choice for broker-dealers looking to launch alternatives to their core wealth management platform. Of course, as we all know, MassMutual runs Advisor 360, which was originally built by Commonwealth and then spun off into a separate company. So this Orion platform is clearly an alternative to that. Could be bad news for Advisor 360 if they're launching this parallel platform. Now, they didn't say they're launching another affiliation model. So, for example, Cetera, who is an InvestNet client for their core platform for the core business, but launched another affiliation model. Then they have Orion available for that. So they have so Cetera's got 4 affiliation models that I know of, at least according to this document I'm looking at from Cetera. One is their RIA and broker-dealer hybrid. Another one is their RIA exclusively, which is IAR only. Then they have, that's Cetera's corporate RIA. Then you can use advisor-owned RIA, which is your RIA and Cetera's broker-dealer as a hybrid, or your RIA exclusively. So they have those 4 affiliation models. And what's interesting is their advice works, which is InvestNet at Cetera with Pershing as the custodian, is only available on the hybrid models. Whether you're using the corporate RIA or the advisor on RIA, you can only use AdviceWorks if you're hybrid. If you are IAR only, then you can only use Orion. Right. I'm sorry. BD Technology, right. So if you are a hybrid, you can use either. If you're hybrid, you can use either Orion or AdviceWorks, but if you're an IAR only Orion. Anyway, it's a little confusing, but they have all these different affiliation models. So I'm assuming that MassMutual might do the same thing and launch other affiliation models and offer Advice 360 for their hybrid model and then Orion for their IAR model. I had an interesting conversation with Lori Hardwick, who is a strategic advisor for Genstar Capital and a co-founder of InvestNet, and she serves on the board of both Cetera and Orion, as well as Cerity Partners, DocuPace, and Investwell. And we were talking about broker-dealers that have been looking for independent RIAs to affiliate with, and they're launching these fee-only affiliation models that allow advisors to drop their FINRA licenses and operate off the broker-dealer chassis, their RIA chassis, so they get all the benefits of scale, but in an SEC-only, fee-only capacity. So Lori's on the board of Cerity Partners, and they're a big acquirer of RIAs, typically in the 500 million to $1 billion plus, and they compete against the Dynasties, Hightowers, and Focus Financials. And they're all competing for the same pool of RIAs that are looking to get acquired. So these RIAs are looking for a good tech stack, and they need to do the due diligence. What tech stack are they using? What products do they have access to? What the culture at the firm? So that's why firms like Cerity and Hightower are winning so many deals. And I think MassMutual, Cetera, Osaic is another example that picked Orion for their independent channel, that they really believe that they need a differentiated platform that can drive their recruiting engine. And for where they're going to be 5 to 10 years from now, they need a succession program as part of their RIA, and they need a lot of options for RIAs because there's so many choices for them. I mean, Cetera is already up to 13,000 advisors or more. It's really growing quite tremendously. So the competition is fierce. Now, MassMutual didn't say they were launching another model, but it seems like this would be a really good first step. More information, you can go to orion.com or massmutual.com. Our next story, SS&C unifies wealth management platforms under Black Diamond brand. SS&C Technology Holdings has combined its wealth management offerings into one unified brand and platform under its Black Diamond unit, which is well known by advisors. The Windsor, Connecticut-based wealth tech firm announced Tuesday that advisors would now access its Black Diamond, Accord, Salentica, and family office platforms under a unified Black Diamond Wealth Solutions brand. Black Diamond is SS&C's widely used wealth platform, which includes portfolio management, reporting, trading, and CRM. According to its alternative investment data aggregator, Salentica is its client relationship management platform, and SS&C also has family office offerings that include portfolio accounting reporting, partnership accounting, and tax accounting and reporting. Black Diamond, according to the company, has over 800,000 active users. That is a lot, overseeing over 3.6 trillion in assets in the wealth management space. The Salentica name will be retired with the transition to Black Diamond's CRM, according to Steve Levant, co-general manager of wealth and investment technologies at SS&C. But Elements and Engage products will keep their branding within the Black Diamond offering. The move is part of an industry push towards single-pane solution for advisors who often have to switch between various platforms to serve the growing list of client needs. Earlier this year, investing data behemoth Morningstar retired its separate office platform product for advisors to partner with Black Diamond. Actually, they didn't retire it. They announced they're retiring it. I think it's going dark next year. But they did announce a partnership and trying to encourage their office clients to convert to Black Diamond, which they were not totally successful at. They're integrating Morningstar's direct advisory suite. Black Diamond users will have access to Morningstar's data and research. SS&C acquired Black Diamond way back in 2015 with the purchase of when they purchased Advent software. And Advent had purchased Black Diamond, obviously, before that. That was also a big news because Black Diamond was basically eating Advent's lunch. So Advent buying Black Diamond was quite a shock at the time. And Black Diamond was really focused more on just reporting, performance reporting. And over the last 10 years, they've built out a full wealth platform suite, which you can check out at ssctech.com and sscblackdiamond.com. And if you, for old school folks out there, you can go to advent.com. Next up, Finny launches multi-channel campaigns and LinkedIn actions for automated outreach. Finny AI, a prospecting and marketing platform built for financial advisors, announced the launch of multi-channel campaigns, a new capability that allows advisors to build fully automated multi-channel outreach sequences in minutes. This prospecting feature combines LinkedIn actions, AI-generated voicemails, personalized emails, and handwritten direct mail into a single, fully personalized outreach campaign designed for effective lead conversion. Within multi-channel campaigns, Finny is introducing LinkedIn Actions, a new capability that enables advisors to schedule LinkedIn tasks such as connection requests and direct messages directly within the Finny platform. These actions are fully automated and can be customized to reflect the advisor's tone and messaging. Advisors may also integrate LinkedIn Actions with other outreach formats, including AI-powered voicemails, emails, and handwritten mail, to execute a cohesive end-to-end prospecting campaign. So these features build on recent innovations that Finny has launched, including Intent Search, which uses 2 billion proprietary intent signals to help advisors identify and engage high potential prospects, along with prospect enrichment and AI-powered voicemails. So I think this is really where a great application for AI in prospecting and lead gen. And I think it's going to work for a while, but it's soon, firms really need to work fast in this space because, as you can see, Finny just got their funding last year, December 2024. They got a seed round of $4 million. And they're already launching some pretty serious features and functionality. And I think advisors are really going to adapt to this capabilities. The ones at least jump on board, I think are going to see much higher conversion rates. And certainly the pipelines are going to be more full because these tools are going to be really good at targeting prospective clients and providing them with hyper, I hate these buzzwords, but hyper personalized outreach that's really going to resonate with them. But soon everyone's going to have it. It's going to be an arms race. Every application is going to be launching these kind of tools. They all really use the same underlying LLMs, whether they're using OpenAI or Perplexity or Gemini from Google. And so the capabilities are going to be very similar. It's really how they put the bells and whistles on the outside. But once I really feel that people, anyone who comes into any kind of money, they change jobs, they get some employee shares, they get an IPO, they get a liquidity event. They're just going to be hammered with, as I mentioned, emails, voicemails, handwritten letters from every advisor. So work fast, advisors. I advise you get these. I advise advisors to get this software, either Finney or something similar, quickly, because I think the time is going to be up before prospective clients are just overwhelmed with all this information. But I think the Finney is one of the leaders in this space, especially when they got an investment from Josh Brown, Ritholtz Wealth Management CEO and well-known industry influencer, CNBC host, and a formerly of the Reform Broker blog with over 1 million readers. And he's also on Finney's advisory board. So I think he's really helping them out quite a bit with their roadmap and also connectivity. Uh, Oh, and one other thing, their seed funding in last year was $4 million, led by Maple VC and HNVR, with participation from high-profile investors such as Morningstar CEO Kunal Kapoor. I know there's a co-founder and CEO of Finney, Eden Ovadia, very well. I moderated her on a panel at Future Proof Miami a couple of months ago, and she was also on the podcast, episode 288 in May, which is called "If ChatGPT and Zapier Had a Baby: AI Productivity Tools That Feel Like Magic," where we brainstorm. We were just talking about different AI tools that are helping busy executives in their day-to-day life. So check out that episode. If you want to learn more about Finney, you can go to finneyai.com. That's FINNYAI.com. All right, we're up to my favorite part of the news. It is the Advisor Tech Map and the Wealth Tech Integration Score. So Michael and I met just this week, and we did our review of the additions to the map. Not many this month. It's a slow month. August is a slow month for the Advisor Tech Map. We only have 2 new applications. We did get a bunch of other ones that tried to get on the map, but for various reasons, they are not being allowed on, mostly because they're services or asset managers with different products. But this is a software map. Not that we don't think asset managers are valuable. They are. We think services are valuable as well. But this particular map, the Advisor Tech Map, which you can find on keatsis.com, is only for software products. So if you're not a software-driven business where you're selling software to make a living, we're not going to put your software on the map. If you're software that supports an asset management business, if you're software that supports a service business, yes, it is software, but it's not going to go on this particular map. So 2 new additions. One is Visor AI Copilot. Now, here's a good message for anybody out there building AI applications, and I know everybody is. We're getting overloaded with AI applications. And Visor is a very cool product. They're calling it an AI Copilot. But when we looked at it, what we see is more of a family office portal. They've come from the family office world. They do administration, they do wealth infrastructure, cash flow planning. They do it overall. Of course, it's very secure. They keep track of the whole family and the relationships between the family. So to us, this is way more of a family office portal, which also has what looks like to be some strong AI components, and everyone is getting building AI as fast as they can. So we are putting this into the family office portal, even though the vendor said, "Hey, we're an AI assistant." But we think when advisors are looking for products, they need to know what the core functionality is to know how it fits into their tech stack. And Visor, which is spelled VYZER, is really a client portal for family offices. So that is where they are going at the moment. Have to cut that out. Mm. Mm. So visor.co, VYZER.co is where you can find them. The second app that is going on the map for September is EasyFolio. Yeah, their website is easyfolio.io, and they are going in the performance reporting category. So easyfolio.io is a pretty basic application. Uh, Looks to me like something that an advisor built for themselves and then started selling it. So it's very bare bones, but it does basic stuff. It generates PDF reports, portfolio reporting, portfolio performance, some nice screens, so you can check them out. And they have also a strong API, which they have on the homepage. You're really into APIs if you put code of your APIs on the homepage, as EasyFolio has. It's easyfol.io. This month we do have more changes. So there's more deletions this month than additions. I think it's the first time in the 7 years Michael and I have been doing the map together that we have more deletions than additions. Some of it is because we just didn't realize we're still doing some cleanup when we were going through some categories and realized there's a bunch of things we missed. So in the custodial platforms category, we are deleting Entrustity, which I believe is going out of business, and we're deleting SSG, Shareholder Services Group, which was acquired by Altruist. We're also deleting OpDevice and OnRamp Invest, which are both in the specialized planning categories. I believe OpDevice went out of business. OnRamp Invest was acquired by a company called Securitize, I think last year. So that's 4 applications going off map and only 2 being added. So a net -2. And now we have a new category. Now, people asked, how do you add categories? How do you decide when to add a new category? It's an excellent question. We add new categories in a couple of ways. One is where we feel that an application has come out or that is doing something totally different than anyone else is doing. And that's very rare. That it's completely different. It's very hard to differentiate in that way where you're built up and no one else is doing in our space. It happens, but it is rare. So another way is where, and you have to have a couple applications. If it's just one, we're not going to make another category. We'll just put them into specialized planning other. So other is sort of the miscellaneous category where we put things. And specialized planning is we've seen the most innovation when it comes to the map and application. It's the specialized planning category where we've seen so much growth in different subcategories. We have retirement, estate, legacy, tax, equity comp, education, cash management, cash flow automation, healthcare, Medicare, business valuation, and other. So other's got a whole bunch of applications in it. And Michael and I agreed when we have 3 is the magic number. When we have 3 applications that are doing the same thing that are now in the other category or maybe another subcategory, we'll break them out into their own category. So charitable giving is a new category under specialized planning. We actually have 4. We had 3 applications. We just realized now we have 4. So those 4 applications are going to be in the new charitable giving subcategory under specialized planning. And those 4 applications are Charity Vest, Philanth Pro. I believe those applications are already on the map, or the Philanth Pro is on the map already. Wait, Charity Vest isn't? Oh, Charity Vest is. So Charity Vest is already in the other map. Philanth Pro is also under other, but then we have a new one called Daffodil. Great name, Daffodil, Dafodil. So they came in, I think, last month or the month before, and we needed some time to talk to them to make sure they were really a software application and not a service. And Daffodil is doing a DAF, a donor advised fund application. So we would need to make sure that they're not actually providing a donor advised service, but it's not. They are actually an application. It's actually software you buy. So Daffodil DA, it's 2 Fs, DAFFODIL.com. Oh, man, I did that wrong. It's Get Daffodil. GET, Get, then Daffodil with two F's, .com. Get Daffodil is their website. And there's a fourth application in the charitable giving space, and that is Foundation Source. And that's a company that's really come on strong in the last couple of years, especially since I think they were acquired by private equity, and they brought in new management led by my good friend Joe Marak, who is the CEO at Foundation Source. And you can check them out at Foundation Source, just like it sounds, foundationsource.com. All right, so that's the rundown for the map. On the Wealth Tech Integration Score, of course, all these applications that are added will get scores on our website, ezragroup.com, and you can check them out at our website, ezragroup.com, and just click on at the top of the page. There's the integration scores menu, and you can go and check out any of these scores, even for the new applications, which should be up and running. Those Visor and Easyfolio, we should have scores for them within a week. There are a total of 569 applications on the Keatsis Ezra Group map at the moment. The biggest category is still by far investment data analytics with 51 applications. So if you're out there, if you're a software developer, you got an idea, investment data analytics probably isn't the best place. You may think you have the best investment data analytics application. You can do something great. It's going to be hard for you to get any traction. There's already 50 applications there. Number 2 is digital marketing with 36. And number 3 is portfolio management with 32.
Sorry.
That's okay. I was just finishing up. Just at the very end here. Let me just finish this last little bit. Let me just go put this on. I'm going to put it on. Oops. I'm too late. There we go. And when it comes to integration scores, we currently have 75 applications out of those 569 have a 6.0 or higher, which is 13%. So we really want to get that number up. So if you are a vendor with an application, please log on to our website, ezragroup.com/register, and make sure you register your application and log on so you can update your data in our database, and your integration score will be completely accurate and updated in real time. We really think more applications should be getting a higher score. You can also reach out to us at integrations@ezragroup.com for information or questions about your integration score. And that's it. You've reached the end of the episode of the Wealth Tech Today podcast. Thanks for listening. Before you go, please go to our website, ezragroup.com, and scroll to the bottom of the homepage and sign up for our newsletter. Once a month, you'll receive an email chock full of wealth management goodness, news, information, and updates. You will not be disappointed. Thanks again for listening, and talk to you all again next time.